Between tariffs, the war in Iran, and an economy that's kept everyone on the edge, you'd think more home sellers would be nervous heading into this spring, but they're not. A brand new national survey says seller confidence is higher than it's been in years. Today, I'm breaking down what that means for you, whether you're thinking about selling or you're out there trying to buy a home right now, and how it lines up with what's actually happening right here in San Diego. This and more covered in this week's San Diego Market Matters, and I'm Karl, your San Diego Realtor. If you haven't subscribed yet, consider doing so now to stay up to date on the grounded read of the San Diego market. Now, let's dig into this. Let's kick things off with your market check. PCE is sitting at 2.8% from the last February reading. PCE is the Federal Reserve's preferred way to measure inflation, and at 2.8%, it's still well above their 2% target. What's worth paying attention to is that inflation hasn't been cleanly trending down over the last few readings. It's been sticky in that upper 2% range. The Fed needs to see this number moving consistently lower before they're going to do anything with the Fed funds rate. Moving on to unemployment, it's sitting at 4.3% from the March reading. Unemployment data tends to come with a lot of noise. Revised readings, conflicting reports, and a calculation methodology that has more layers than a freaking onion. But when you strip all of that away and look at what the Federal Reserve is focused on, 4.3% is healthy. Anything below 5% is effectively strong in the Fed's eyes. Now, despite the headlines, the labor market is still not sending any alarming signals. Lastly, we have GDP. GDP grew 0.5% in the fourth quarter of 2025, and we'll be getting an update on this at the end of May. This 0.5% is a slow number. There's no dressing that up. But here's what matters. It's positive and not negative. A negative GDP reading signals a contracting economy and raises real recession concerns. At 0.5%, the economy is still growing. Mind you, it's slow, but it's still positive and it's moving forward. Now let's talk about the Federal Reserve's interest rate, because this is one of the most watched numbers in the entire economy right now. The Fed funds rate is the interest rate that the Federal Reserve sets, and it has a ripple effect on everything from business loans and credit cards to an indirect effect on mortgage rates. Right now, the Fed funds rate sits at a target of 3.5 to 3.75%. Big businesses, small businesses, home buyers, everyone is watching and waiting to see when the Fed is going to start bringing this number down. 8 times a year, the Federal Reserve meets to decide whether to raise rates, lower them, or to hold them where they are. Their next meeting is April 29th, shortly after this video drops. This will be the last meeting with Jerome Powell as Fed chair before Kevin Warsh, Trump's elected replacement, comes in and possibly steers the Fed in a different direction. There's a tool called the CME FedWatch tool that tracks futures contracts to show the probability of what the Fed will do at each of the upcoming meetings. Think of it as the market's collective best guess about what's coming next from the Fed. Right now, the FedWatch tool is showing practically 100% probability of a hold at the April 29th meeting. Market has made up its mind. No changes coming this month. And looking all the way out to December of 2026, over 70% of the market still has the rate holding where it is by the end of the year. Then there's a small chance of at least one cut before 2027. It's not a guarantee, but it's a meaningful measurement that's worth watching as the months play out. Now, with that backdrop in place, here's the main story for this week. Realtor.com released their 2026 Spring Sellers Survey. The headline finding sellers are heading into the spring with some of the highest confidence we've seen in years. Despite the tariffs, the economic uncertainty, the Iran situation, and rates having been elevated for over 2 years, sellers feel good. And the data behind that confidence tells a real story here. Nationally, 40% of potential sellers describe that this current market is that of a seller's market. Then there's another 33% call it a balanced market, and 27% say the buyers have the upper hand. Now, that 27% who see it as a buyer's market are likely concentrated in specific pockets of the country, markets like Austin, Tampa, large parts of Florida, where inventory has surged and sellers are outnumbering the buyers willing to meet their price. In most of the country, and especially here in San Diego, that's not the picture. As I've reported recently, our inventory levels are horrifically low, leaving buyers in a really tough position. Not many options, sustained pricing, and elevated rates compared to pre-COVID. Moving on, more than 8 in 10 sellers expect to get their asking price or better. Nearly half expect to land exactly at their asking price, and another 37 expect it to go over. That level of confidence tells you something important. Sellers are not walking in feeling desperate. The risk is when that confidence isn't grounded in what the data actually supports. A seller who prices above what the market will bear isn't going to get their number, and the longer that home sits without selling, the harder it becomes to actually recover. Next, 3/4 of sellers expect to be under contract within 4 months. The national average days on market right now is 57 days, so roughly 2 months there. Sellers' expectations are not unrealistic, as long as pricing is right from day one. As for San Diego's average market time in comparison, we're significantly below the national average there. Here's the thing. Timing matters. It's absolutely essential. According to Realtor.com's 2026 Best Time to Sell report, we're right in the heart of the best listing window of the entire year. Homes coming to market during peak spring attract almost 17% more views than a typical week. They sell roughly 9 days faster and carry prices about $26,000 above January's national levels. Sellers coming to market this spring with a correct price have timing on their side. The top motivations for listing are profit and desire for a different neighborhood, both at 41%. Profit motivation is up from 36% last year, but here's a detail that doesn't get enough attention. The share of sellers who say they're listing because they can no longer afford their home, that number dropped from 10% in 2025 down to 8% in 2026. That might look like a small move on paper, but what it signals is important. Fewer sellers are being forced into the market by financial pressure. The sellers stepping forward this spring are largely choosing to sell, and a market full of sellers who are choosing to sell that are not desperate is a more stable market, aka sustained prices at the very least. And there's another layer to this data worth calling out. A significant share of the sellers in this survey, those looking for a different neighborhood, those looking in need of more space, and those moving for family or for work, they're not going to disappear from the demand side of the market. They're sellers right now, but they will be buyers next. When a seller has to purchase something right after they list, that demand stays in the system. It's a cycle, and it's part of what keeps the market moving even when supply ticks up. Now here's the part that tells you most about where the market is heading, so stay with me on this. Seller confidence is high, but the number of sellers expecting to give buyers something to close the deal, whether that means helping them with repairs, covering some closing costs, or maybe even making a price adjustment, that number jumped 9% in a single year. In 2025, about 30% of sellers expected to make some kind of adjustment. In 2026, it's nearly 40%. Sellers are optimistic, but they're also more realistic than they were a year ago. They're going into this market with confidence and a backup plan. This is good news if you're a buyer, and this is a significant shift in 1 year. The seller who assumes buyers will waive everything and pay full price with no questions asked is a shrinking share of the market. Locally here in San Diego, this will be based on what you are buying and what price range you're buying in. Please, please don't make the mistake that national data speaks for San Diego's market exactly. Next, the survey also asked what sellers would do if their home didn't sell in their desired timeframe. 35% said they'd reduce the price, 33.5% said they'd wait it out, and 29% said they'd pull the listing off the market entirely. That last number deserves some attention. National reporting saw a real uptick in withdrawn listings last year. Sellers with equity and no financial pressure to move have the option to sit and wait. That's a different market dynamic than what we saw during the run-up of 2021 and 2022. Now let's bring this to San Diego. The national survey positions the West as the softest of the regions in the country when it comes to seller confidence. More West region sellers see it as a buyer's market compared to the Northeast and the Midwest. Looking at a map, you'd assume San Diego fits that mold. Our local data says otherwise. Circling back to this metric, San Diego's average days on market in March was 40 days. The national average is 57. San Diego homes are going under contract more than 2 weeks faster than the national benchmark. 3/4 of sellers nationally hope to sell within 4 months. In San Diego, the average is closing in 6 weeks. The timeline sellers are hoping for is the one San Diego is constantly delivering on. Another metric showing San Diego's strength is months of inventory. San Diego has 2.5 months of inventory right now. A balanced market typically sits between like 4 to 6 months. At 2.5 months, we're well within the seller's market territory overall. On the single family side of the market, it's still tighter. 2 months of supply with active inventory down more than 21% from a freaking year ago. And if you want to know where the real heat is in San Diego right now, it's in the entry-level detached home market. Homes priced between $750,000 to like 1.1 million are seeing multiple offers on a consistent basis. If you're a buyer in that price range, you're competing for every listing that hits the market right now. On the condo and townhome side, there's a little bit more breathing room, but there's a caveat worth paying close attention to. HOA dues right now are having a meaningful impact on what buyers can qualify for. A home that looks affordable at a purchase price might not pencil out once you factor in HOA fees running anywhere from several $100s to over $1,000 a month. That affects your payment and your approval. If you're shopping condos, look hard at the number before you fall in love with the listing. Please. Here's the bottom line for you. If you're thinking of selling a single family home in San Diego this spring, the local data backs up the optimism that the national survey is capturing. Inventory is tight, homes are moving fast, and sellers are closing near asking. Price it right from day one and the market is working in your favor. If you're selling a condo or even a townhome, go in sharper. Conditions are a little softer and buyers have a few more options. And if you're a buyer, 40 days on average means you have time to be thoughtful, but not time to wait indefinitely. The spring window is open right now. Now, after seeing all this data, do you think the sellers that are heading into this spring are completely within reason, or do you think they're a little delusional? Drop your take in the comments below. I want to know where you stand. And that's a wrap for this week's San Diego Market Matters. If this video provided value to you, please consider liking and subscribing to the channel if you haven't already. And if you're thinking of buying or selling here in San Diego, my contact info is in the description below. Feel free to reach out. I'd love the opportunity to work with you. As always, I'm Karl, your San Diego realtor. I'll see you in the next video.